Hello, everyone, and welcome. Today, we're going to talk about a major development that's redefining the landscape of personal finance for millions of Americans: the recent initial public offering of Chime Financial, a company that has boldly challenged traditional banking norms. This isn't just another tech company going public, it's a significant moment for the entire fintech sector and for consumers seeking a different kind of financial relationship. Chime's IPO, priced above its initial expectations, signals a robust market appetite for innovative financial services and sets a crucial precedent for other digital-first companies waiting in the wings. Chime, established as a leading consumer financial technology company, offers a mobile banking platform designed to be helpful, easy, and, crucially, fee-free. Unlike many traditional banks that levy charges for overdrafts, monthly services, or minimum balances, Chime's model is built on the premise of succeeding when its members succeed, thereby eliminating punitive fees. This approach has resonated deeply with its target audience, particularly consumers who earn less than $100,000 annually and who the company believes are underserved by conventional banking institutions. The average Chime member is around 36 years old. As of March 31st, 2025, Chime reported having 8.6 million active members. A remarkable 67% of these members utilize Chime as their primary financial relationship, indicating a strong level of trust and integration into their daily lives. This positions Chime not just as a casual financial app, but as a central financial hub where members consistently deposit their paychecks and manage their everyday spending. Members engage with Chime extensively, performing an average of 54 transactions per month, with 75% of these being purchase transactions made using Chime-branded debit and credit cards. The sources indicate that approximately 70% of these transactions are for essentials like food, groceries, gasoline, and utilities. Chime have also strategically expanded its product offerings to further support its members' financial well-being. This includes features like SpotMe, which provides fee-free overdraft protection, and MyPay, a prepay-day line of credit. While Chime itself is not a chartered bank, it leverages banking services from partners such as the Bancorp Bank.NA and StrideBank.NA, ensuring that member deposits are FDIC insured up to applicable limits. This digital-first strategy allows Chime to significantly reduce the overhead associated with physical bank branches and ATMs, passing on cost savings to their members. The company's primary revenue stream is quite straightforward. It generates the substantial majority of its revenue through interchange-based fees from debit and credit card transactions. In the past year, Chime generated $1.3 billion in payments revenue, which accounted for 76% of its consolidated top line, representing a 25% increase from 2023 levels. The remaining $397 million came from platform-related revenues, stemming from its FDIC-insured deposit accounts, checking accounts, and other mobile banking offerings. Although Chime boasted an impressive revenue growth, surging 88% last year to $1.673 billion and 79% and 83% in 2022 and 2023 respectively, the company has not yet achieved overall profitability, reporting losses in previous years. However, in the first quarter of 2025, it did report a positive net income of $12.9 million, a 2% year-over-year increase. The IPO itself was highly anticipated and demonstrated strong market confidence. Chime Financial successfully raised $864 million by offering 32 million shares, with 19% of these being secondary shares sold by existing stockholders. The pricing came in at $27 per share, which was above the expected range of $24 to $26, signaling a strong market reception. At this pricing, the company commanded a fully diluted market value of $11.4 billion, with other sources putting the valuation at $11.6 billion. The company's shares are set to trade on the NASDAQ Global Select Market under the ticker symbol CHYM. It's important to note the context of Chime's valuation in this IPO. While the $11.6 billion valuation is significant, it represents a substantial recalibration from its last private financing round in 2021, when it was valued at a reported $25 billion. This valuation reset is a dynamic playing out across the tech and fintech industries as executives and investors adjust to new market realities after a period where capital was extremely abundant. Despite this adjustment, the IPO still marks a significant exit and creates considerable returns for early backers like DST Global and Crosslink Capital, who were among Chime's top institutional shareholders before the offering. Chime's IPO arrives amid what some are calling a mini boom in the fintech sector's public market. Its debut follows successful public listings from other venture-backed fintech companies like Circle and eToro, both of which also priced above their initial ranges and saw positive trading on their debuts. Circle, for instance, experienced a remarkable 168% gain on its first day of trading. This suggests a growing appetite for investors for fintech companies despite a multi-year IPO slowdown triggered by rising interest rates and broader market valuation resets.
So, the decision to go public now, even with the valuation cut, reflects a strategic move for Chime. According to experts, it allows the company to raise meaningful capital and gain what's known as acquisition currency, which can be used to acquire other companies and expand its market presence. The company has identified a massive serviceable addressable market, estimating an annual revenue opportunity of up to $86 billion by targeting 196 million individuals earning up to $100,000 annually. This potential could even grow to an annualized pace of $426 billion by targeting consumers earning up to $200,000 yearly. For the broader fintech industry, Chime's performance post-IPO will be a closely watched indicator. It's viewed as a canary in the coal mine, meaning its success or struggles could significantly influence the receptivity and timing of other fintech companies that are currently in the pipeline or considering going public. Companies like online lender Klarna have already delayed their IPO plans, while others like Gemini and Bullish have confidentially filed for offerings. The success of Chime will either encourage more listings or lead others to sit on their hands and wait it out. A large syndicate of prominent investment banks acted as joint bookrunners for the offering. These included Morgan Stanley, Goldman Sachs, JP Morgan, Barclays, Evercore ISI, UBS Investment Bank, Deutsche Bank, Piper Sandler, Nomura Securities, and WR Securities, demonstrating this significant financial backing and interest in Chime's market debut. In conclusion, Chime's journey to the public market is more than just a financial event. It's a testament to the evolving needs of consumers and the transformative power of financial technology. By offering fee-free, accessible banking services and cultivating deep financial relationships with its members, Chime has carved out a unique and impactful position in the American financial landscape. Its successful IPO not only provides significant capital for its future growth, but also signals a new chapter for the fintech industry, one where digital-first solutions are increasingly embraced by both consumers and investors. Thank you for joining me today. I hope this discussion has provided you with valuable insights into Chime's IPO and its broader implications. Please stay tuned for more updates on this dynamic and exciting sector.